Okay.
Can you hear me now?
Yes, we can hear
Yes.
you.
Good morning, Karen.
Good morning. How are
Good
you?
morning. I'm doing
We're happy
great.
to
How are
see
you?
you.
Same here.
Good. Great. Auntie?
Good morning, everyone. Thanks for joining us this early, and thanks for bearing with us as we work through some technical issues. We really, really appreciate having you here this morning. We are the Healthy Places Research Group here at the Center for Quality Growth and Regional Development, and we're delighted to see all of you. Ideally, we'd be enjoying this meeting with a hot cup of coffee and some bagels, but that's unfortunately the situation we're in right now, but we're definitely trying to make the best of what we have, and we're delighted to have with us today Karen Leone de Nie, and she is, just give me 1 second. I had some network issues going on here on my end. Sorry about that. Okay, I'm back on. So we have with us Karen Leone de Nie, who is the Vice President and Community Affairs Officer at the Federal Reserve Bank of Atlanta, and she's going to be talking to us about a very, very important topic that has touched all of our lives for the last several months, and we are indeed very excited to hear about the results of a research study underway at the Federal Reserve Bank that looks at how the pandemic has had divergent impacts across the economy and across communities, and how we can create a roadmap for inclusive recovery. So with that, I'll hand it over to Karen. And again, thanks everyone for joining us this morning.
Well, Arthie, I just have to interject myself. She's a graduate in the Masters in City Planning program and an alumna of the Center for Quality Growth and Regional Development. Welcome, Karen.
Thank you so much. I'm trying to pull up my screen and it doesn't seem to want to let me do that.
Okay, well, if you see
So,
the square television, it looks like a television in the center. You press
yeah,
that
I've got
button.
that. It's blocking it for some reason. Good morning, everyone, and I apologize for all the technical difficulties that I
No
seem to be
worries.
having this morning. Everything is running really, really slowly. But Arthi, I think you have my slides. Would you mind showing them? That might be our best bet.
Sure, no problem.
Okay, let's just start with that. I think that's
Okay.
our easiest course. And while you're pulling those up, why don't I go ahead and get started? So it's so nice to be here, everyone. I'm really looking forward to this conversation. I'm hoping to hear from you too. I know we have the chat feature here, and so I'm going to keep it open, and I'm going to encourage you while I walk through this talk to go ahead and ask me questions. And ask me if I can dig into any specifics that you'd like to know more about. I'm happy to try to do that. I may not have all the answers, but what I will try to do is is do best I can with what I've got or find the answers for you. So, but I do think that this could be a dialogue that we could have, because what we have been doing at the Federal Reserve Bank of Atlanta and actually across the Federal Reserve System is recognizing that we're at a point in time where data is lagging too far behind to be responsive to community needs. Across the country, COVID-19 has had just such a tremendous impact. And I know this group and the folks who are on the call, I know I've got a lot of friends from CDC here and other places, are really closely watching the public health implications of this. But as we know, health and the economy intersect both in personal ways and in national ways, and never before have we ever seen it intersect, certainly not in my lifetime, but in many, many decades. We haven't seen this intersection be so dramatic. And really to point to the longstanding public health disparities that our country has faced from both income, race, and ethnicity, and it is just being exacerbated by COVID-19. So I'm hoping that as I walk through this talk, I get a chance to learn from you too. I wish I was in the room with you there, because I would be reading your body language and quizzing you along the way, because there's so many things I hope to hear So what I'm going to do is I'm going to rely on chat, and I hope that you will take advantage of that and offer up observations, offer up questions along the way. So I am the vice president of.
Everyone can see the slides? Everyone seeing the screen?
Yes.
Okay, wonderful. As Karen mentioned, feel free to use the chat box for questions. Also raise your hand. We'll try to monitor that as best as we can. If not, we'll definitely have a Q&A session at the end of the talk. So, Karen, when you just say next when you want me to forward the slides.
Okay, I will do. Before I start off, I do need to say that these comments are mine alone and do not necessarily reflect the views of the Federal Reserve System or the Federal Reserve Bank of Atlanta. But with that, I'm going to go ahead and jump in. So if we can go to the next slide. So I know that not everyone is familiar with the work that the Federal Reserve System does on community and economic development issues, and that's where I sit, is in that part of the function of the Federal Reserve. So I wanted to take just a brief moment and just remind folks, the Federal Reserve is part of the Federal Reserve Bank of Atlanta is part of the central bank for the United States. There are 12 reserve banks across the country, and of course we have the Board of Governors in Washington, D.C. And here in Atlanta, we look at the entire what we call the 6th Federal Reserve District, which includes all of Georgia and Alabama and Florida, and most of Tennessee, not Memphis, and the southern halves of Louisiana and Mississippi. And someday, when we can get back together over drinks, I will explain why we don't have a more normal geography. But suffice to say, we cover a broad swath of the Southeast, and the work that we do here tries really hard to think about what's happening in urban places, rural places, what happens as a result of different states and state decision making, as well as really the real diversity, the demographic and social diversity that we have in the Southeast. So there's a lot that goes into when we say we try to put our ear to the ground and hear what's going on. It takes a lot to hear what's happening from our 6 states, as well as all the other 11 reserve banks face the same challenge. But fortunately, that's exactly what we're here to do. Let's go on to the next slide. So I'm going to just share a little bit about what we focus on at the community development at the Atlanta Fed. So we're truly focused on low and moderate income communities, and our efforts are really around building economic mobility and resilience in those communities. And I'll be honest, up until this year, we had so been focused on mobility. It's been this question of how do we help grow both wealth and income opportunity for individuals, and we had not been as focused on resilience. So obviously, over the course of this year, a lot of our focus has switched back to resilience because the economy has taken quite a turn and has put a lot of people in really difficult situations. But we do this by focusing on human capital and workforce development, which means how do people prepare for the jobs that are available, and how do the employers who are thinking about hiring folks, how do they interact with these employees and how do they support their economic potential? We do it through looking at small business and entrepreneurship. One of the best wealth building opportunities is to be a small business owner, successful small business owner. And so we look a lot at what is the credit and finance environment that's available to small business owners to make sure people have access to that credit. We obviously do it through housing and neighborhoods. I think the public health community and the public health world has cemented for people that healthy housing, that housing as a foundation for both economic and individual health is critical. And so a lot of what we do is look at housing situations. And then last, we tie it all together with community development finance. So none of these things happen without the ability to finance and have the resources and able to enact programs, build housing, conduct training, and make credit available. So that's what we focus on at the Atlanta Fed. We can go to the next slide. So I want I'm going to change. I wanted to let you know where I was coming from, but now I'm going to change to talk a little bit more about what do we know about where the economy is right now, and then what do we know about what's happening in low income. And so, I think you see a lot of this in the news every day. Employment conditions are improving, but not for everyone. And the people who were hardest hit by a lot of the job losses were people in the service sector, and they're often young and of low income and low wealth. We're starting to see some businesses reopen, but even those businesses that are reopening are doing it on a much smaller staff. So you're seeing hotels and the tourist industry reopening, but because of social distancing requirements, they're opening at a fraction of what they had before. In some states, they're lifting some of the restrictions on social distancing and opening up more of these venues to consumers and to clients. But what they're finding in many cases is that the consumer is not ready to come back, not to the scale that they had anticipated. And so even if the social distancing requirements have been lifted, there's still a lot of strain.
Oh, there you are.
Arthie, is it okay? Can you hear me?
Karen, I can hear you. I don't
can
know.
hear you.
Oh, familiar voices. Okay, I'm going to keep going.
Yeah, do that, please.
Okay, great. Okay, we also know that there's a lot of pent-up demand and limited supply for residential housing. That market has continued to move. But what we also see is that there is tremendous increasing risk of rental evictions. And in fact, as we look at what's happening in the economy, while the housing market may remain relatively stable and growing in terms of home ownership, there is increasing concern that the evictions in the rental market and the risks in the rental market are where we're going to see the greatest challenges. We're starting to also look at financial institutions who are worrying about whether or not the borrowers are going to be able to repay. And so you're starting to see them put a little bit more of a conservative stance. And so it's tightening credit to some degree. There are also things that are happening in other industries, like in the energy and oil production industry and manufacturing. While you're still seeing some growth in those areas, in other cases, you're seeing continued weak demand for a variety of reasons, because people are not moving around, buying in the same scale, and doing the same kind of work that they were doing before. And so I share this. This is actually from the Beige Book, the September 2020 Beige Book, where we're out listening to community members and we're out listening to businesses to understand, prior to when the data comes out, what's happening in communities, what's the real-time impact on the economy. And overall, the biggest message that we continue to hear is that uncertainty persists. And when uncertainty persists, investments aren't made, jobs aren't created. There is a lot of caution in this kind of environment, and it means the economy hasn't been recovering. It had recovered for a while, but it's starting to sort of level off again. So let's go on to the next slide. So I gave you kind of a big picture view of what's been happening in the economy, but I want to step back now and start to talk a little bit more about what's been happening in low and moderate income communities. So at the start of the pandemic, my colleagues and I across the country said, we need to hear from low and moderate income communities and the organizations that serve them on a steady basis. We know from the last recession, from every crisis before that low income communities and those organizations like the Boys and Girls Club, the United Ways, the small community neighborhood housing organizations, they're the ones that will get hit hard, and they will not bounce back very quickly. And when the rest of the economy does start to recover, people tend to forget that these low-income communities don't bounce back as fast. And a lot of the policy interventions and a lot of the funding starts to dwindle before you see a fully inclusive recovery. So we got together and we said, well, let's start a pulse survey. Let's start hearing what's happening in these communities. And what I'm going to share with you today is a walkthrough of what we heard in August from these stakeholders. So we surveyed in a convenience survey across the entire country. We surveyed contacts that we have in the Federal Reserve System from either financial institutions, local, state, and federal government, nonprofit organizations, private industry, and other is largely education providers is largely what sits in that other category. And we started to ask them questions about what they were seeing in their community. As you can see here, we have in this last round of the survey, we have a fair distribution of organizations serving urban, suburban, and rural communities. And we asked them, what do you work on? We wanted to make sure that we were hearing from people who were working on housing and workforce development and jobs and education and health and all of the sets of different activities that make a community whole. So we, again, I think we did a fair job of being able to answer those questions. I see Jimmy here has asked, what's included in health? So health is included is public health, healthcare providers are largely the two categories that have self-selected health as a category. And then we ask the question, are you a direct service provider? Meaning, do you go direct to consumers and small business owners, or are you more of an intermediary? And importantly, what we really wanted to hear from was those people who were having one-on-one contact with our communities, because we thought that was really important to understand what was happening. So let's go on to the next slide. It's a really short survey, and we asked some very specific questions. What we were trying to understand and keep a pulse of is what kind of disruption are communities facing? We have been using this information over the last, we're going into our fourth round of the survey. We've been using this information to educate our presidents in what's happening in low-income community, our presidents of the Federal Reserve Banks, the governors at the Board of Governors in DC, as well as philanthropic organizations, business organizations, all kinds of community groups across the country. We give these presentations on a regular basis because we want to keep people watching and hearing what's happening in these places as they devise solutions to stabilize and help communities recover. So if we look at the next slide, and it seems it's not coming up very fast on my, there it is, okay. So on the next slide, we asked our first question. So at this point in time, what level of disruption is COVID-19 having on economic conditions for the people and communities you serve? And as you can see here, 64% of our respondents told us that it's a significant disruption and they expect that recovery is going to be difficult. As we've tracked this question over the last 3 surveys, what we are continuing to see as more people are telling us that this is going to be a significant disruption, that recovery is going to take a long time. I think early on when we asked these questions, we saw more of a dispersion across the country, where the Northeast, where New York was being hard hit by COVID, was recognizing the severity of these of COVID-19 and its impact on communities. Whereas places in the South that had not yet put in as many of the mandates, had not yet had as many business closures, weren't seeing these disruptions in the same way. But as the survey has progressed and as COVID-19 has taken its course across the country, it's a much more consistent story of all over the country. The level of disruption is expected to be significant. So let's move on to the next slide. So we also asked the question, what are the top impacts of COVID-19 on the people and the communities you serve? And I don't think it'll come as any surprise to folks that income loss, job loss, employment has topped this list repeatedly every year. Business impacts had been a close second in the first and second rounds of the survey, but have since declined some as there have been to the academic year. Education is climbing as one of the top impacts and one of the top concerns. And has the number expecting a quick recovery changed over time, Catherine? I'm going to give you a slide on that in just a second that'll tell you a little bit more about what we're but let's move on, and we'll get to this next slide now, if we can go on. So we also wanted to know, we know what's the top issue. Oh, you're right where you need to be. Thank you.
Okay, all right.
I appreciate that. If I'm talking too fast, just tell me to slow down. I have a lot of information I want to share. One of the things I've been asking is, are things getting better yet? And are any of our communities telling us that things are getting better yet? And as we looked at the results in this last survey, across the board, things continue to get worse. From education, health, business impacts, consumer needs. So basic consumer needs include access to food, housing, basic services, and obviously job loss and income loss continues to climb. The last two categories that you see on this slide are private financial supports and public financial supports. So what you're seeing here, private financial supports are private sector lending financial services, and then public financial supports are things like the Paycheck Protection Program or the CARES Act and the funding coming from the CARES Act and the $1,200 that individuals had received at the start of the pandemic. And so across the board, we continue to hear that it's either not changing or things continue to get worse. We can go on to the next slide. So back to Catherine's question, we've been asking our respondents, how long do you think recovery is going to take once the pandemic is over? So this is actually not, and it doesn't show, or no, it is starting from today. Sorry, when we first asked this question, we asked once the pandemic was over. We started to ask the question of how long do we think it's going to take to recover? And increasingly, with each subsequent survey, the number of people saying greater than 12 months from today continues to grow. And one of the questions that we are posing before, or we're asking ourselves right now before we put the survey out into the field next week, is do we actually need to add another category? Do we need to say greater than 24 months? As the pandemic has continued, as we've looked at people who have lost occupations that may not return, as we've looked at the fact that we're seeing greater and greater instability, particularly in the rental market, these questions about the duration and the recovery time are really pressing on us. And so I would invite you today, if you wanted to share at this point in time, how many months do you think from today it's going to take for the people in communities where you work to recover and to be back to where they were economically before the crisis? So I'll keep talking, but I would invite folks to drop that in the chat if you have any want to take an estimate for your community. So let's continue on to the next slide. So we started to ask the question also of what's happening to the entities that work in these communities. So when we ask questions about the individuals, the households, the families in these communities, we're asking, do you have access to basic food? Do you have job training? Can you get a job? All of those kinds of things. And we recognize that all of those things happen because there are organizations, there are local governments, there are for-profit and nonprofit organizations that help provide those services and connect communities. And those are the constituents that you often don't hear what's happening to them. During the last crisis, we saw, for example, the nonprofit housing developers dwindle to almost zero in much of the Southeast and much of the country. We saw a lot of our workforce development providers end up consolidating or disappearing entirely. And so those are the kind of questions that we wanted to ask, so that as people think about it might help that might help to constructive consolidation of some of these organizations, that they recognize where these organizations sit. So this is actually a story that's a little more hopeful than the one that I had shared about individuals and households. While we are still seeing a significant number of these respondents telling us that they've had significant disruption, they expect the recovery to be difficult, that number has declined as organizations have started to either receive federal support for the work that they're doing, or they've just figured out how to deliver their services in a socially distanced environment. But still, and I say that as I look for glimmers of hope, because I think these organizations are really, many of them are very resilient and very creative. There is still a lot of challenge here, so I don't want to underestimate that either. I mean, you can see here that 51% still say this is a significant disruption. And so let's move on to the next slide and let's talk about what that actually means. And I'm going to break for a moment here just to also see that we're looking at how many months. I'm seeing anywhere from 24 to 48 months until a recovery in the chat here, which suggests to me I probably need to add another category to my survey question. So one of the questions that we ask the entities that we're surveying, how long, with their existing resources, how long can they operate in their current environment before they exhibit financial distress? And when we ask about financial distress, we're asking questions. We clarify that you would have to lay off staff, close and end programs, close locations, or potentially close entirely. And again, I'll present a slightly hopeful tale on this, is that the numbers have been improving. And I think that that's a good sign that the government dollars that have come in have helped stabilize a lot of these organizations for at least the time being. But we still see that by the end of the year, we're looking at upwards of 10% of these organizations that are in real that could be in real financial distress. So let's continue on. The next slide. And we wanted to understand a little bit more about why they're in distress. What does distress look like for them? And one of the things that we had also done is we've done a lot of phone interviews with organizations like the ones that are in this survey. And what the story has been from them to give more kind of color to these data points is that the demand for services keeps ticking up. That at the height of the pandemic, everyone thought that it wasn't going to keep increasing, and yet it continues to increase since the March timeframe. And yet the ability to provide those services, to provide all types of services, be it housing or jobs or food services or education or health, for many of the organizations continues to decline. And the answer to why it's declining, or the reason that they've told us that it's declining is a number of factors. One of them is that social distancing just has continued to make it really hard to deliver the kind of services that are often face-to-face. So think about Goodwill's job training programs. So many of those were face-to-face classroom experiences. People came in, they got counseling, they got training. They then went out and they were helped to find placements and jobs and different opportunities. And organizations like that had to very quickly turn their model to being largely virtual, just like all of us, just like education has so many things. And some of that, something gets lost. I don't get to shake your hand today. I don't get to know all the people in the room that are listening right now. And it's the same thing in all of these services. And it means that it's just really hard for these organizations that are working in low-income communities that often struggle with broadband issues, access to technology, access to just basic internet. All of those things make it really hard to do this work. And that hasn't let up yet. The other thing that their staff, they're not changing significantly. Their staff are also juggling, teaching their kids at home, managing their home life, and working remotely. And so they're just sometimes not as productive as they were before. Their expenses are increasing because social distancing has required new PPE or new different practices, different scale that they can work in. And at this point in time, much of their funding outside of government funding has either remained just simply steady, and in some cases, and not shown in the slide, but in some cases it's declining. And so this is something that we're watching very carefully, because without the financial resources, a lot of these organizations won't be there to support communities going forward. So let's go on to the next slide. So what I shared with you today are some of the high-level findings from this survey. We run it every 8 weeks. As I had mentioned earlier, it is going out into the field again next week, and so we're looking to continue this work. The next round of the survey is also going to give us more the demographic profile of the clients that these organizations serve, because we want to make a little more sense of what level of services are available to communities of color, and also to rural areas, and all of the different aspects that these organizations serve. And so the report's available online. I'm happy to make the slide deck available after. And all of this, the links are active links. But I'm going to turn from here, and I'm going to take a moment to see if you have any questions. I'm happy to answer them, because I'm going to turn from here to other resources that we have available that will help you as you're doing your work and responding to COVID-19, that might put some data into your hands that you think that you might find useful. So before I do that, though, do you have any questions about this survey?
Karen, what has surprised you the most in terms of the results? This is Catherine.
So it's a combination of things that have really surprised me, and I appreciate that question, because some of what has surprised me in the survey results has been that we are starting to see the organizations stabilize. But what's surprising me more so is that it's looking increasingly like our households are not stabilizing. That even with the increase in jobs over the last couple of months, even in states where you're seeing lower COVID numbers, even in those cases, the communities aren't stabilizing. And we knew this. I think I'm always very optimistic that things will always get better. We knew that low-income communities would struggle, and that they would struggle longer and harder than the rest of the economy. But that it continues to get worse has been something that's been stark for us. I think the other thing, though, that doesn't show up as much in the survey, in the quantitative survey data that I'm sharing, but what I am seeing in our qualitative surveys that we haven't done all of the analysis on those responses, is there is tremendous creativity and collaboration happening in cities all over the country. And you're seeing an intersection of sectors, and you're seeing an intersection of disciplines in a lot of places coming to solve problems. And that creativity has given me a lot of hope that I think there's always, don't let a good crisis pass you by. Like, I think some places are really thinking about what it means to have a different new normal when they come out of this. it's not everywhere, but there are gems that are definitely showing up across the country. And it's actually kind of the next area that we really want to work in, is to start to find those and tell people about them, because I think sometimes just the knowledge that they exist and how they're put together can be enough to spur creativity in other places. Any other questions before I move on?
Hey, it's Jimmy. I see a few in the chat that look really, really good. But I'm curious, and you may have said this earlier, in my survey method words, but are you able to track individual respondents from time to time, or is it just a whole sort of longitudinal sample versus, like, can you go back and see that one individual responded multiple times and see that change versus the whole group changing?
So we're working on that analysis now, to be able to track some of our panel over time that have been with us from the beginning. So that's some of the work that we're trying to get into as we get towards the end of the year. And I know I have a lot of researchers on this call, and I'll say that, to be honest, this is a fast and dirty survey. This is like, get it out fast. We need to start hearing quickly, and work on it as it goes, because we're running it every 8 weeks. And so that has been sort of the model for the survey. I'm also going to apologize now because I did not see all the questions coming in, so I see them now. And so I'm just going to take a quick look at those too. Could you talk a bit about how the various sectors are helping communities provide services they need? What can public health or other sectors do to help? So, one of the things that I think has Can you hear me now?
Yes.
Yes.
Okay. I'm not sure what happened there. I think the question that I was responding to when I dropped off was, what can the public health community do to help other sectors, and what can other sectors do? And so the public health community, I know, understands, individual behavior, consumer behavior, and I think working closely with the organizations that are either trying to get people back to work or are trying to ensure that their processes are their intake processes are working, I think would benefit a lot from understanding how the public health community has really studied what motivates people, what helps them understand and kind of respond in a more productive way to a pandemic environment. And I think that that's a real opportunity. The other thing, though, that I've seen organizations do, and I've seen multi-sector collaboration come together to do, is to pick a problem and pick a new normal they'd like to see, and look for a longer-term solution. Look for current stability, but look for a longer-term solution. So I've seen communities come together around evictions and recognizing that while there have been moratoriums that have prevented evictions, in some cases they're still happening, or at least people are being displaced from rental housing just from pressure from landlords. But I see communities coming together to say, not only do we need to either think about rental assistance programs, but we also need to be thinking about tenant protection issues, tenant empowerment opportunities, ways to put services in the hands of tenants and information in the hands of tenants that will change kind of the dynamic of this rental landlord relationship even beyond the pandemic. And those kinds of multi-sector partnerships tend to involve the nonprofit, the for-profit community, the governments, and we're seeing these things happen here in Atlanta among many other places. I see Andy asked a question, the disconnect between how Wall Street is doing while communities do not do well. So, I think we've all seen this. The financial markets they're still, going up and down depending on a whole host of issues. Some of them based on the pandemic, but often other things too. But communities right now, as we look at what's happening in a lot of the communities that we're focused on, it's that the sectors that are the most hard hit by this are the ones that drive the wealth and stability of low-income communities. When it's the service sector and food and service sector, whether it's the tourism sector, retail sectors, all of these are the ones that have provided a lot of jobs in low-income communities, and they have not recovered. And so just by the nature of the social distancing requirements, I think that is part of the issue too. Exemplary communities to model. I honestly, I don't think I could point to any one exemplar community. I think there are some good things happening in every community, and I wish they could all be combined into one cohesive package for everywhere. But one example I will give is, especially early at the start of the crisis in Miami, and I can give examples of these in other places too, but this one always stands out for me, is that Miami is made up of a lot of small businesses, and frankly, as is Atlanta, and a lot of very small businesses, so under 20 employees size small businesses. And in any crisis like this, they usually do not have that much of a safety net to withstand the impact of a crisis or of an economic shutdown. And so the community got together there very, very quickly and figured out how to harness the financial resources, both from CARES, from existing city funds, and from philanthropy, to create a brand new loan fund so that they could get funding to the small businesses very, very quickly and help stabilize them. But they did it with the intent that they wanted a long-term loan fund so that those resources would be available, because I think they had the foresight to recognize that this was going to be a long crisis, but also because they knew their community needed this every day anyway. I think that's one really good example. Another one that I'm very inspired by is our community development financial institutions. So these are the financial institutions that are, mission driven to serve low-income communities. And over the last several months, they have been getting increased funding because people have recognized that people, including like Netflix and a lot of it, have recognized that they're best positioned to serve low-income communities and business owners of color. And I think that they have demonstrated. So one of them, for example, is Hope Enterprise, which runs out of Mississippi, but serves Mississippi and Alabama and Louisiana, and they have been able to take some of the federal programs that so easily are accessed by much larger businesses, like the Payment Protection Program, and make them consumable and available to really small businesses in rural areas. And you're seeing that happen over and over and over again. So I'm going to move on. I think I've answered this, but I'm going to, and just some of this, I want to know that we and have made a little more consumable is in your hands if these are things you want to work on. So if we can go on to the next slide, and actually just keep going, go 2 slides.
One
Okay,
more?
so that's perfect. Nope, you're right where you need to be. Thank you. So the first one is the unemployment claims monitor. And so at the start of the crisis, we had recognized that being able to track unemployment claims was going to be really important, and there wasn't an easy resource for that. And not only was it going to be really important to understand the sheer numbers of unemployment claims, but to actually understand and break that data down both by age, race, ethnicity, and break it down by industry. And so we have a new tool called the Unemployment Claims Monitor that does that, and it also does the new Emergency Unemployment Compensation Program as well. So I would encourage you to check that out and track that over time. It gets updated weekly. If we go on to the next slide, we've also updated something we call the Opportunity Occupations Monitor. So this particular tool actually gets down to the metropolitan area, and it asks questions about what jobs, or it's state and metropolitan areas, but it asks the questions of what jobs are available in my community that don't require a bachelor's degree, that still pay a median wage or above. And so we created this because, and we think this is especially important now, because as we've seen a number of sectors really decline and have far fewer jobs, people are looking to retraining programs. They are looking to where the next occupation is going to be for a number of people. And so what this does is it also scales the number of jobs that will be available there, gives salary ranges, and talks about, which of those jobs actually fall into an opportunity, what we call an opportunity occupation, and which of those don't. If we go on to the next slide. So the other area of work that we have been doing is something that we call advancing careers. And I suspect for the folks on this call, you're probably, we failed to call these things benefits cliffs or we don't lead with the question of benefits cliffs, because not a lot of people know what benefits cliffs are. But we have increasingly recognized and have looked for opportunities to kind of shape some of the benefits cliffs, of asking these questions of when someone wants to move out, we always consider, but who ultimately wants to get into the healthcare field, wants to become a certified nursing assistant, perhaps an LPN, and onto an RN. That journey makes a lot of sense over the long term, and your individual income and wealth would grow over the long term. But when you actually look at the benefits cliffs that people experience, the loss of whether it's healthcare, food supports, housing supports, the loss of those federally provided benefits and state provided benefits means that their actual financial resources for as much as 10 years can be less than if they had just stayed in the job as working at a concession in a movie theater. And so the choices that people are forced to make are ones that are really a no-win situation. If you said 2 months, that's one thing, but 10 years or 5 years, especially with someone who has children, these are really hard choices to make. And what it means is that people are not advancing in their careers. They're not looking at these advancement opportunities. So we've built out a whole body of research on this that you can visit on the website, a number of tools that we have available. And not only do we look at it from the perspective of the individual that is facing these really hard choices about their occupations and what they're going to do, but we then also take a step back and look at what does it mean for the tax rolls. What does it mean? What are the costs and benefits to the larger community when people can choose to make can choose to move up on a career ladder? And so some of the work has also included working with some of the states. We're working with Alabama right now to take a look at this, to actually help people use some of the tools that we've built to help them identify, one, occupations that have a shorter income gap, but also looking at the assets that the state has in order those can choose some of these true opportunity occupations. So let's move on to the next slide. So I had mentioned housing and particularly rental housing. One of the things that we've also been closely tracking and created a tool that folks can access is the Southeastern Rental Affordability Tracker. And so what this tool actually lets you do is look from the state or city or metropolitan geographies and ask how many people are cost burdened, what's your shortage, your total shortage of affordable units for categories, and it allows you to tell of housing, potential housing instability. We've also been working really closely actually with Matt, who has been working on evictions first with us years ago and continues to now. But we've been working on the eviction monitor too. And so we've been following the issue of rental housing quite closely and are starting to look for places that have good policy solutions to some of the challenges that we're starting to see in the Southeast. So let's move on to the next slide. So, and the next slide is the Small Business Credit Survey. I'd mentioned this earlier. We're actually in the field with this survey right now, and we're asking a lot of questions about whether or not small businesses their experiences with credit access. Credit access is not the only reason a business thrives or grows, but it is an important one. And so we've been tracking small business credit since 2010 during the recession. We really started tracking this closely and have continued this survey since then. So if that's an area that you want to learn more about that. And I'm going to wrap up because I know we're probably running close on time here. If we go to the next slide, we package all of this information in a number of publications. And we do this so that we take all of this data and then look at it from different perspectives, whether it's a policy solution. So on this screen, you see building a skilled workforce for a stronger Southern economy. In that particular publication, we have a lot of local and state policy options of ways to build the skills and resources in a particular community. We also get much more granular and start asking questions about policy options and strategies to deliver mixed income housing and a whole host of other things in these publications. You move on to the next slide. We also try to bring this community together, and so we do have a set of resources I hope if folks would be interested in. We have webinars. Most of these have switched to webinar format for now. Some of them always have been, where different policymakers and practitioners come together to talk about the most pressing issues today. The Ask Us Anything series is really focused on workforce development and jobs. Connecting Communities is a system-wide resource that actually reaches all different types of community and economic development issues. And if we go to the next slide, and then I'm going to wrap up. Importantly, though, we've been working really closely for several years now. We've really been trying to put a racial equity lens on the work that we've been doing. And with everything that has happened this year with the killing of George Floyd, with all the host of issues that I think have come to the public attention in a way that hasn't as much in recent years, we recognized that there was a real opportunity to really talk about racism's impact on the economy. And so our president, Raphael Bostic, has written extensively about this and been interviewed many times. He's asked us to come together with two other reserve banks, with the Minneapolis Fed and the Boston Fed, and host a series that we're calling Racism in the Economy. The first one starts on October 2nd, but this series is going to be focused on laying a broad foundation of the implications of structural racism on the economy. And then all of the subsequent sessions after October 7th are going to be focused on what do we do about it. So once in November, we'll begin those sessions. That first one will be on employment. We'll talk in a subsequent one about housing, in another one about health. We'll also talk about criminal justice, and we'll talk about financial services. And those sessions they'll be policy proposal sessions where different thought leaders, practitioners will come together to suggest ways that we can enact both local, state, and federal policy, as well as employer policy, policies out of the judicial system, things that we could do in a whole host of sectors to start to really truly dismantle the racism that impacts both the economic consequences for individuals, but also the broader health of the economy. And so I hope that you will consider joining us for those sessions. I think we still have some openings for this one, although I know it's going to be widely attended. So, and it's something, and we're hosting that for throughout the country. So if you have others that you think would be interested in joining that, please go ahead and pass that on. And so with that, I just want to say thank you, and I'm happy to answer any questions. I know I covered a lot of ground today, but I know that we hold a lot of useful resources that folks can use, and I try to do my best to make sure that we get them out to as many people as possible.
Well, Karen.
So any questions for me?
No, but I have a comment. I have been stunned by the amount of resources that the Fed delivers, the kind of programs, and I'm so excited that all of us will now be more informed and can take advantage of a lot of the data. We're actually in a partnership now with a number of other universities tracking the impact of recovery across major cities in the U.S. And so what I'm going to do is to bring some of the information you shared to our dashboard. We're having a national dashboard, and then each city has its own dashboard. So I'm really excited that a lot of what you shared will be something we can use immediately. So thank you for that. And the presentation certainly met my expectations. Absolutely wonderful. And we're so pleased that you are a friend of the center, and we really appreciate the good work that you do.
Well, thank you. I will say I don't do this work, so I want to make sure to give the big shout out to the team that we have at the Atlanta Fed, and I'm going to encourage everyone to recognize that if you have questions about any of these topics, I have someone who knows a lot more about it than I do that I can make sure you get to talk to. So don't hesitate to reach out to me, because the team that works on this on all of these things is tremendous in not only their data skills but their expertise on the different subjects. So I really appreciate that. And Catherine, I can't wait to hear about that study, because I would love to hear more. And if there's any way that we can be helpful, please do let us know, because we probably have a few more things under the hood that I haven't shared right now.
That would be great. I will follow up with you. And then Michael Elliott wants to know how to register for the racism sessions.
Okay, so there is, I'll really quickly post the link. And I encourage you, this is open, it's free, and it's open to the public. I think it is going to be particularly useful for students too. And so please do feel free to share this with students as well.
Great.
And that should be the link to the series.
Thank you. Any more questions for Karen? Anyone? Arthi, is there anything you need to ask or share?
And no, these were some wonderful insights, so we really, really appreciate it.
This is John Stewart. Good morning, Karen and all. I've got a question about your publications. I've accessed some of them. I'm going to try to look at more. But my specific question is about whether any of them do a better job of addressing social determinants of health. And if there isn't something particularly tailored around social determinants of health, would that be feasible to develop a publication that would report on an ongoing basis social determinants of health data, just to put it into that lens? I'm not suggesting collecting new data, obviously, but just putting it around the lens of social determinants of health and impact on people's health.
Yeah, John, it's great to see you. It's been a while, so it's really nice. It's a great question too. So a couple of comments I have on that. So we don't currently have a data tool on social determinants of health, and it's an interesting question to ask. Our colleagues at the San Francisco Fed have led most of the work on social determinants of health, but not and their consequences for low-income communities. But all of the banks have done some parts of that work. Some of the work, the publications that we do have, in particular, have been the intersection of health and community development. We have a discussion paper that particularly it looks at the role that several entities have played in the Southeast in working and kind of given case studies. Frankly, it's a case study report. I think that's the right way to describe it. Of examples from the Southeast, because so many of those examples come out of other parts of the country that don't necessarily apply to some of the conditions that we face. So I'd be happy to share that too. But if you wanted to talk more about some data ideas you have, I'd be happy to do that too.
Okay, great. I'll follow up. Thanks.
Oh, Andy, that's a fantastic question that you have too about entering the job market and having trouble networking. Because I've given a lot of thought to this. I have a lot of friends whose children are either going off to college or graduating from college, or trying to figure out what they're going to do after high school. And I picked my brain about what have been the ways that I've learned about new people. And I will say, just had this conversation with my son yesterday. He's only in 4th grade, so I don't have to worry about this yet. But oddly enough, it was a conversation I had with him, which was, social media is an amazing thing. And I have met and developed longer term relationships with people who were frankly on Twitter, I think is the main thing, who were on Twitter and we're having really interesting responses to either, at the time, it was events that we were going to in person. But I still tend to see that when I do virtual events. And I look for those people afterwards. And so the thing that I just keep in mind, and even for myself, it's like, how do I continue to network now? And trying to take advantage of all the different technology that's out there is just it's kind of a must right now, and it's forced us to all be very nimble in that. So I think that's the very much just my point of view on that, but that's what I've seen. Great. Well, any other questions for me or?
Yes. Any more questions from anyone? Going once.
Sure. I really wish it was in person, but it's been good to see so many familiar faces.
Been great to see you, and I don't see any other questions. Karen, we're going to let you go. We know you have a job to do, and we appreciate your getting up so early, but this is the Healthy Places tradition, and you can see it works with all the outstanding people who make the time to attend. And of course, a large part of that was you and the attractiveness of what you shared. So go have a fabulous day. I'm going to take it upon myself to wish all of us a very good rest of the day, and we will be having you back, young woman. So don't think this is the last time you will hear from us, okay?
And thanks everyone for joining us this morning. We had a great attendance, so delighted to see that.
Okay, everybody, have a great day. Bye.
Thanks.
Bye.
Bye.